Bitcoin is essentially a virtual currency or a way to conduct digital transactions, like any other kind of electronic money. What distinguishes it from our current currency, then? Recently, there has been a spike in interest in Bitcoins on a global level. It is essential to comprehend the principles underlying this and all other virtual currency types. Bitcoin and its competitors are based on encrypted cryptographic techniques. The currency decentralizes as a result, and the user now owns it. These can be purchased online or at a Bitcoin ATM. A Bitcoin stands out because it can lessen the possibility of fraud and identity theft, making it a secure place to hold money. Bitcoins allow for both money transfers and online purchases of products and services. In this video, we are going to discuss few benefits of using Bitcoins which make it better than any conventional currency. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. Bitcoin is a leaderless system of rules, not rulers. Many people who had concerns about the decisions made by those in power in response to COVID-19, such as ordering the lockdown of society and enforcing dubious health regulations, did not trust this group of individuals. So it could be a good idea to look for a financial system that is independent of those in positions of political authority. Without leaders, a monetary system might still work. Currently, a group of people manages our monetary system, making decisions based on assessments of recent occurrences and projections of likely future developments. When it comes to other cryptocurrencies, their issuance is decided by a group of people who are in the public eye and therefore vulnerable to coercion and greed. Furthermore, there is no predetermined timetable for the creation of other cryptocurrencies. The way Bitcoins are distributed is predetermined, based on code, and available to everyone. The rules that a node's administrator chooses to follow are entirely up to them. Even if a millionaire decides to change Bitcoin's code to become proof of stake, my node will continue to run the current code. Hosting a node equalizes the playing field for all participants, regardless of whether they have 2 million Bitcoin or 2 Satoshi. After the protocol was published, Satoshi Nakamoto, the creator of Bitcoin, executed one of his greatest acts. He disappeared. This suggests that there isn't a single person who could be sued, confronted, or coerced into changing the policy. Bitcoin is not a group of autocrats, it is a collection of rules. Bitcoin is actually decentralized. Most Bitcoin projects that utilize the word decentralization do so without justification. Decentralization is essential for people who believe that powerful nations are working together to enforce rules that restrict freedoms and prohibit bodily autonomy. It is important because it makes a system resistant to failing in challenging circumstances. If a protocol is decentralized, it can withstand attacks from other governments or military forces. This is what happened when mining Bitcoins was outlawed in China, and the network continued to function as designed. Bitcoin kept running online, creating blocks and processing transactions in spite of an aggressive government's attempts to shut it down. According to some, decentralization is a spectrum. Contrary to what some would think, anything can be decentralized or it can't. If your chosen blockchain can go offline for 72 hours or is simply switched off to give developers uninterrupted time to fix it, it is not decentralized. If your money is not decentralized, it is subject to the vagaries of internet service providers. Bitcoin is actually decentralized since its hashing power is distributed across the globe and copies of its ledger are made available to users who run full nodes. Bitcoin is censorship resistant. Another important feature of Bitcoin is freedom of speech, particularly for individuals who have opposed mandates. In the infamous Citizens United decision, the Supreme Court declared that money is speech. Attacks on free speech have occurred frequently in recent years, including the permanent suspension of a president from Twitter, the revocation of medical licenses for sharing COVID-19 data that didn't fit the narrative, and the freezing of Canadian citizens' bank accounts for supporting a cause deemed unacceptable by their government. Money is considered communication under the law, hence it cannot be stopped or blocked for any reason. Bitcoin operates in this manner. The owner can decide to pay a greater price to have their transaction added to the next block if an attempt is made to blacklist an address. Only one mining pool has tried to filter transactions. After that, they soon changed their mind and began validating transactions like the other miners. Not every cryptocurrency is unaffected by censorship. On the Ethereum blockchain, a decentralized autonomous organization called DAO experienced a vulnerability in 2016 that resulted in the theft of $150 million, and the code was hard forked to make it seem as though the attack never happened. If the code can be changed to make it seem like a hack never happened, it can also be changed to prevent certain transactions from happening. For instance, the most popular Ethereum wallet and the biggest NFT platform, MetaMask and OpenSea, respectively, blocked users from Iran and Venezuela since they are on the US sanctions list. Similar restrictions were made by MetaMask and Infura, two services that are directly connected to the Ethereum infrastructure, due to concerns about legal compliance. If people can't get their money, their ability to speak freely is limited. With Bitcoin, censorship is impossible. Bitcoin is seizure-resistant. This is a complex issue that calls for clarity. Despite not being seizure-proof, Bitcoin is seizure-resistant. The Canadian Freedom Convoy recently raised Bitcoin funds that were later seized, casting doubt on this aspect of Bitcoin. A private key was divulged during a police raid, enabling some of the Bitcoin currency to be taken. Not all of the money was taken. Some was held in a multi-signature quorum or had already been given to demonstrators. It's important to remember. No matter how resistant to political control Bitcoin is, the reality that its users are not will always reduce its value and utility. In the first article quoted, this is indicated. Users of Bitcoin have the option of making it easy or difficult for others to take their money. After learning that the hackers who stole 120,000 Bitcoin were putting the secret key in cloud storage, the FBI recently succeeded in seizing the money. Be mindful, everyone. Just another person's PC is what a cloud is. If they had been wiser, they would have invested their money in a multi-signature worldwide distributed system. A German hacker who had secretly placed mining software on people's computers and accumulated over 1,700 bitcoins was able to successfully avoid having his cryptocurrency seized while serving a 2-year prison sentence in a separate event with a different ending. He won't divulge the passcode, so police can't access the seized money. Bitcoin can be made as seizure-resistant as you like. Bitcoin had a fair launch. The Bitcoin statement made by Satoshi Nakamoto in a public forum may have been observed by anyone paying attention. When Bitcoin was formally launched in early January 2009, anyone running the protocol could earn Bitcoin in return for using electricity to operate their computer. The same cannot be stated for any other cryptocurrencies. 9.9% of the initial token supply went to insiders who worked on the Ethereum network, and the project's creator, Vitalik Buterin, praised the premium. According to Vitalik Buterin, one noisy proxy for the blockchain industry's continuous substitution of philosophical and idealistic ideas with short-term profit-seeking values is the number of premiums, or the allocations that cryptocurrency creators make for themselves. The invention of Bitcoin presented an once-in-a-lifetime chance for an open, welcoming beginning. Notable cryptocurrencies are shown in the chart below along with information about their launch date, premium percentage, and x-axis. With almost no benefit going to insiders or even the project's creator before it was made public, Bitcoin's uniqueness is extremely clear. When Satoshi ran the code with them, the probability of finding a block was proportional to the amount of CPU each participant was using. The author of the paper that explained the Ethereum premium, Camilla Russo, stated that Satoshi Nakamoto gave anybody who was interested the same option to acquire Bitcoin when the network was built, as he specified when mining would begin and published the software beforehand. By simply downloading a wallet and signing up for the network, anyone may immediately earn Bitcoin. They could also invest in an ASIC miner and link it to a computer to mine Bitcoin, if they have the cash. There will never be another opportunity to distribute money fairly because Bitcoin was the only cryptocurrency that was formed fairly. Bitcoin is issued based on proof of work. Even if they only vote for it, the code can be changed by those who have staked the most money in other cryptocurrencies that employ the proof of stake method. With big pharma, big agriculture, big tobacco, and other bigs using their massive resources to pressure politicians for the changes they want to see passed for their benefit, this sounds uncannily similar to how governments operate now. Every user on the network is given the same level of consideration according to Bitcoin's proof of work algorithm. In a recent Forbes article, Pete Rizzo explains why Bitcoin uses energy in the first place. However, by connecting Bitcoin issuance to the energy market, Bitcoins become fairly and widely dispersed. The majority of people have access to energy, thus they could mine Bitcoin everywhere in the world if they so desired. Bitcoin secures the transaction history by preserving it on the blockchain since it needs energy to mine, and it enables the value it creates to be distributed fairly by anybody spending energy to do so. By utilizing electricity, miners must sell some of the Bitcoin they have made to pay for the cost of the power source, further dispersing the currency. Rizzo's piece is a great place to start for anyone interested in cryptocurrencies but concerned about a future climate catastrophe or who think proof of stake is a better option. The final factor that sets Bitcoin apart from other cryptocurrencies and gives it an advantage over centralized or regulated currencies is proof of work. What do you think of our video? Feel free to share your thoughts in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.